Believe it or not, gold is picking up speed again. We are trending to the upside with another 3-day massive winning streak for the bulls. And the question is, how much further can this thing really go? Well, I found something that I need to show you guys in this video that to me actually really makes sense as to why gold is so strong and why I actually think that it can continue to move higher despite what so many people have been calling for, which is trying to call the top, trying to call that it's going to pull back and that it's got to come down. I've got some stuff to show you here that I think might be useful to you if you trade gold or the dollar, and we'll also talk about stocks because some of the same data I think could start impacting the indices as well. As we get started, if you could hit the thumbs up button for me, subscribe if you're new to the channel, and let's jump into gold first and foremost. So we've had this huge move higher, and I've actually been looking historically. I did this in my video yesterday, but this is one of the best runs in gold that we have had in a very, very long time. In the 2000s, we had a massive run up in gold, and then if we actually go to the 1970s, we had this massive run up in gold. And if you watched my video yesterday, I compared the distance that we've traveled so far in a percentage form as being around 250%, whereas the run up that we saw in the 2000s ended up being 650, and the run up that we saw in the 70s was 730%. So the idea that gold is too high and can't keep going, to me, is sort of a slap in the face to history, which would suggest that if you were to get that same 600 to 700% return, you're talking about a really, really strong way to go. I mean, you're talking about if we were to get just 600%, that's $11,000 in gold per ounce. Now, I do think that what you kind of have to understand about that number is that that took place over the course of many years previously. So it doesn't mean that we're not going to get pullbacks in between, but I would not be surprised if the coming years continue to be very strong for gold, as if history is a lesson, shows us that typically it makes a lot of its gains all in succession, and then it sort of goes into a recession or a kind of a standstill period of time as well. And right now, momentum favors the bulls. But what I really wanted to show you here today is a look at the bigger picture, the global theme. Remember that gold is really sort of gold versus fiat currency. Is fiat currency losing value quickly, or is it losing value slowly? Is there uncertainty in the world, or is there sort of stability in the realm? That is what gold ultimately really strongly trades off of. And when we talk about the economic surprise meter, I found something that I thought was worth mentioning, which is this little component right here. What we see with the Global Economic Surprise Score, which is a tool that we built that reflects the average economic outperformance or underperformance across the 8 major currencies listed above. A higher score indicates a more robust global economic outlook, and of course a lower one suggests a little bit more contraction relative to expectations in the global economy. We have the US putting in a little bit of a mixed number, the New Zealand reading here getting a very weak one, the Canadian reading looking really weak, the Swiss franc here, or the Swiss, Switzerland also putting in a weak reading, Japan putting in a weak reading. And what does this actually mean? Well, let me show you Canada, for example. Over here, I can navigate to the CAD economic heat map. Simply clicking this will show me a list of some of the key economic metrics for the Canadian economy. And what we see here is that we have a pretty not great outlook relative to expectations. For example, GDP growth in Canada came in below forecast by a pretty wide margin of 0.2%. If we take a look, for example, at retail sales, this was lower than previously reported. If we take a look at inflation, inflation is cooling, which suggests the central bank may continue to cut rates there. We have unemployment at 7.1%, which is, that's a meaningful unemployment rate and has been rising. Previously, it was at 6.9, now at 7.1, above forecasted readings. And we start to get a similar picture as we look across many of the major economies. For example, the European economic data is also looking pretty bleak, as well as New Zealand, which had a big slide in their GDP numbers. And we do also have Chinese data as well, which is also looking a little soft. And so maybe there's a possibility that this rush into gold is also a little bit of rush into gold because there's a lack of stability in terms of some of the economic readings that we're getting from these major economies. If the economies of the world do start to truly contract, gold starts to become an even more attractive relative sort of place to park your money, especially when we're living in a time where debt to GDP ratios around the world are going crazy. Let me show you. I'm looking at a global map of the central government debt as a percentage of GDP. And what we can see is a lot of the major economies of the world, like for example, Japan, have massive debt to GDP ratios. Same with the UK and the US. What we see here is essentially these large players in the economy spending beyond their means. And so I want you to think conceptually about this for a second. Would you lend money to a place that has a slowing economy and is spending far beyond their means? And I think the answer is obviously to that question, you'd at least want to get paid very well to do that, right? I mean, if you're going to lend to somebody who has not as great of a track record as maybe other places in terms of paying you back or steady income, you'd want to get paid nicely in terms of interest for taking that additional risk, right? Well, this is exactly what the bond market tracks. The bond market is the way to lend money to the US government bond through the 20 and 30 and 10-year government bonds that they offer. You can essentially lend your money to the US, or you can lend your money to, for example, the UK, or you can lend your money to the EU. And what we're seeing is bond yields are going up. Even though central banks are cutting rates, there's still this preference from bond investors to say, you still got to pay us a lot, otherwise we're not going to lend you money, because people are nervous about the government spending. And so if we have slowing economies and rising debt to GDPs and national debts are going crazy and central banks are buying gold like crazy, does it really sound outrageous that gold is finally breaking out and making a huge move up? I would actually argue no, and that 37.76, sure, it sounds expensive, but 2 or 3 weeks ago, I made a video about how gold at $3,500 looked cheap, and it's continued to move higher and higher. And I still think it's cheap at $37.75. In fact, in the next few years, I would not be shocked at all to see gold to make a move to $5,000 an ounce. Now, it's not going to happen right away, and there will likely be pullbacks in between. And those pullbacks are where we wait patiently for trading opportunities. At least with my style of trading, I think there's a dip buying opportunity if you do get a pullback in the price of gold, 3,600, 3,540. We have to reprogram our brain a little bit to say, when you're going long gold, you're essentially saying, I think purchasing power is going to dwindle, which is a pretty good bet, right? If you're short gold, you're making a bet that you think purchasing power of fiat currency is going to rise, which historically has been a very poor bet. That being said, in the short run, we've had a little bit of a rebound in the dollar, and I wouldn't be surprised if we did head back up to test the top end of this range that we've been in. Why do I say that? Well, last week we had some sort of bright spots in terms of the US economic data that we got. Jobless claims actually were better than expected, and retail sales numbers came in better than expected as well. We've had a lot of positioning on the bearish side, and if we take a look at institutions are still very much on the bearish side of the US dollar. Check this out. They've been heavily selling the dollar here. So I do think that if the dollar gives you a big bounce, there may be an opportunity to sell into that from a bigger picture. But in the short term, I do think that we've got a little bit of a bottoming forming currently. And by the way, what you're looking at, for those who are newer to my channel, we're looking at the commitment of traders data. We've built some tools that help us to track this stuff in more granular detail. And the yellow line reflects the long percentage over time that institutions have in terms of their positioning on the dollar. And what you can clearly see is that it has been trending down for some time. There is still preference to be short the US dollar by institutions, and they remain having a very heavy short position on the dollar. I find this to be very interesting information and added confirmation to why I think the bearish side of the dollar continues to look like the better spot to be. Now in the short run, again, I think we may get a little bit of a bounce. We've hit a longer term level of support. I wouldn't be surprised if the dollar did make a push higher off of some fresh, better than expected economic data, but I do think you may get the opportunity to start looking for better short opportunities if you do get a rally. By the way, the tool that you're looking at is the Edge Finder, and we do have a free version now available. Down below in the description, I'll leave a link to where you can sign up for the free demo version of the Edge Finder. It is a limited version. If you want the full access, you'll have to purchase a copy, but this might give you a good way to explore it for free, or you can pay for a 30-day trial. To do that, you can also find information on our website using the chat with us icon in the bottom bottom right hand of our website. Or if you'd prefer to speak directly to a member of our support team about getting a copy of the Edge Finder, you can use the first link in the description down below this video. Or if it's easier and you're watching on a television, simply scan the QR code on your screen right now to chat directly with a member of our support staff about getting a copy of the Edge Finder. We do also offer payment plans, and we can share some pricing details with you, but by scanning this QR code and speaking to our team, they can get you some information about how you can get a copy of the tool if you're interested. Now that we've talked about gold, what about silver? Well, silver's going crazy. Silver looks so good. And in my opinion here, the best way to approach silver and gold is, unfortunately, to do nothing and to wait. Again, if you're not in the moves, you've missed them, and that's okay, right? I mean, there may be more upside, but I think the risk reward to buying up here is not great, although I also don't like the idea of shorting them. So for me, the bigger picture view would be, let's look for opportunities. If we do get pullbacks, for opportunities to get back long if the data supports it. And when I say data, what I'm talking about is the scoring system within the Edge Finder, which looks at economic data, technical data, and sentiment readings to build a bias around a particular currency pair, commodity, or index. And you can actually see gold and silver are no longer on the bullish list here, which I think is an okay reading. I think we wait for pullbacks here, we stay patient and see if they start to materialize back on the screen. In the meantime, I do have a long position on the Australian dollar versus the Canadian dollar, and I have a bullish bias in some of the yen pairs, like dollar yen, pound yen, and Swiss yen, and the Australian dollar versus the Japanese yen. Here's a look at the Japanese yen currency index, which seems to be in mostly a downward trend. Specifically with some of the yen pairs, they're very choppy right now. So I'd wait for a little bit more of a decisive move. If we were to see some sort of big push through the highs, pullback, there could be some trading opportunities, but the chart is a little choppy for me right now. Taking a look at the indices, they are still just off their fresh all-time highs. Stocks are continuing their sort of massive bullish run. Similar to gold and silver, I like the idea of watching for pullbacks and to see if the macro data sort of starts to support a setup on this one, but I am looking for a pullback to around 65.60 or 64.80 before even considering, as I do think they are a little bit stretched in the short run. You can see the RSI is really screaming overbought, but that does not mean I want to short it or try and time a top. I think there's better risk reward if we were to get a little bit of a pullback in this chart. In fact, we could start drawing some fibs and you start getting into the idea of like, okay, a 61.8% level looks really good here if you were to get a week or two of a pullback in the indices. Here's a look at the put to call ratio specifically for SPX. And what we can see is that we went from a huge amount of put demand to a significant amount of call demand. However, we've bounced back into sort of neutral territory. And if you don't know about this chart, I'll leave a link in the top right hand of the screen right now to where you can watch a full video on how to use the put to call ratio to scan market sentiment. It is my personal favorite tool of tracking market sentiment. In the Edge Finder, we've also programmed it to grab data for things like gold as well. So we can see gold is getting a bit of a neutral reading here. And when this gets overextended to the upside, that's telling us that there's a huge demand for puts or bearish bets. So crowd sentiment is bearish. And if the thing goes to the downside heavily, that shows you that the crowd sentiment is very bullish. Interestingly, there actually is a lot of put demand for the NASDAQ right now. And just look at the turnaround that we had in the put to call ratio for silver. We used the ETF SLV, looking at options volume for the calls and puts on that one. Just went absolutely jumped to the upside parabolic here in terms of a huge amount of puts. And then we shot all the way back down here to almost looking like demand for calls is very high. So keep an eye on this. Sometimes you get some noisy readings, but it can be very useful just to get a general idea of crowd sentiment on things that you might be trading. And today's video is sponsored by Vantage Markets. If you're looking for a better CFD brokerage and you're a trader outside of the United States, listen up for a second. They're currently offering a really generous welcome bonus to new traders that join with them. The information for that can be found linked in the description down below this video. If you're interested in low trading fees, there's also a copy trading platform if that's something that you're interested in, and you can trade a huge selection of different charts and symbols, everything from CFDs on stocks, cryptocurrencies, indices, gold and silver, oil, and Forex pairs, of course, so many other things. So if you're interested in checking out their CFD platform, make sure to do so using the link in the description down below so that you get access to that welcome bonus they're currently offering my subscribers. Now back to the video. You have these moments where everything is sort of in never-ending upward movements or downward movements, and it can be a little frustrating to be like, hey, what do you do? Because as traders, we feel like we have to be doing something. Like as traders, it feels like we need to be trading. And sometimes the weirdest thing is, like, as a trader, you you don't have to be trading. You don't have to be placing new trades. I do have some trades on. I am long Aussie CAD. So the Australian dollar versus the Canadian dollar. I'm in this trade. This is going pretty well. I do think that Aussie CAD has a bit of a continuation pattern forming. I think we've pulled back to 38.2. We found support along this previous high. I think this currency pair looks okay. It is also, I believe, still a top setup. Yep, a +5 score on the Edge Finder. I believe the economic score is higher. Yes. So economic only, if you don't have the Edge Finder, the economic only tab shows you just our growth, inflation, and labor statistics and how they're filed or how they're scoring each currency pair or commodity. So in this case, we have the Australian dollar versus the Canadian dollar getting a +7 on the eco score, like only economic data, not looking at COT, not looking at trends, not looking at other things, just looking at the economic data. AUD CAD looks pretty good. So I went long on a pullback on this one. Echo Setups is amazing. Yeah, actually a lot of people really like this one. And I'll tell you why we made this. It's for one simple reason. The top setups simple, which I'm sorry, just top setups in general, it does sort of have an innate style built into it, right? Because it's looking at daily trends. So it's a little bit more oriented towards swing traders. I wouldn't say strongly. It gives you like the daily chart trend. And then it's looking at like sentiment, which is a bit more of a slow indicator. Like commitment of traders data is not a day trader scalper, sweet spot. It's more of a, swing traders move. So what's nice about the top setups eco page or the top setups sentiment page is it gives our users the chance to say, well, hey, look, I'm more of a day trader or a position trader, a swing trader. Like I'm more longer term or I'm more shorter term. And I just want the economic comparisons. One that is screaming right now is actually USD CAD, the Canadian dollar paired up against the US dollar. I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.